Vanakkam friends, welcome to our YouTube channel. Like always, we are going to discuss about the forecast of Nifty movements for the upcoming week. Last week we were a bit confused on which direction Nifty is going to go, and we have given a hedged kind of option which delivered more than 100% returns. So I would suggest that don't get excited about those kind of returns because every week we will not be able to get that kind of returns. So it might be one-off case we will be able to get that kind of returns. So speak about the real. Let me speak about the reality. So I'll have you well in advance. Now for this week we are going to do analysis first for Nifty, and in the next video we will be having the analysis for Bank Nifty. Before going into this video, I would like to suggest the newcomers who are seeing this video for the first time, please subscribe to our channel and click the bell icon so that you will get notifications as and when we post our new videos. And if you feel this video is worth for sharing to your friends or relatives, whoever is interested in markets, share them as well. Let them also get benefited out of these views. I have opened Nifty daily charts for our analysis. I have drawn a Fibonacci retracement stuff by connecting the highs and lows of previous week. Along with that, I have marked the exact high and exact low of last week. The next resistance level which is available after the high of previous week. With that, I have drawn two trend line kind of stuff. One a rising trend line and falling. Another one is falling trend line. This one is falling trend line and this one is rising trend line. With this, I have added the 200 SMA, which is in red color here, for making our analysis little bit depth. Why? Because we have closed at a critical juncture. On a weekly close, we have closed at a very critical zone. That is the reason I have put too many of studies over here for making you understand how Nifty is going to perform during next week. Or else our analysis will be very simple, either by trend lines or by Fibonacci retracement or by moving averages. Maximum I would use only two of the studies for you to make understand. But last week Nifty has closed at a very critical zone. It has closed below 20 moving average, 50 moving average as well as the 100 moving average. Now the next place where it can take support ideally would be the 200 moving average only. All the supports in between will be temporary and it will be a sell on rise kind of market going forward for next couple of days, at least until the global cues become stagnant or let them stop the fall, especially the US cues. There is a steep fall in US market for the last 2 days after the inflation data. Everyone knows that inflation numbers will be high this time. But the key point which we want to note over here is the inflation of US is high when it is considering to the last 40 years period. The numbers which they have posted during last week, 2 days back, is the highest ever inflation which they have seen in the last 40 years. That is the reason markets are falling like this. Even in yesterday's market, until 11 o'clock, 11:15 or levels our time, Nasdaq was quoting somewhere around 90 to 100 points on the downside. But while close at 1:30 a.m. in the morning, it 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 has fell down drastically and closed almost at near the lows of the day, 395 points. See, where is 195 or 100 points thing? Where is 390? Almost 400, which is 300 points below the level which I have seen at 1150. So this has created some jitteriness in all our markets, especially in Asia also. On Monday there will be a gap down opening. SGX also has been quoting almost 160 points down on Monday. Things could change a bit on Monday morning if Nasdaq is trading in green before our market opening, or else if it is cracking further, we may even open further gap down. Probably we can even see 200 points gap down opening also. Already we have closed below 20, 50 and 200, 100 moving averages. So now the panicness will be more. VIX will be raising. It is at 18.68 yesterday. Probably on Monday morning itself it will cross 19, 19.25, something like that. And if it crosses 19.5 or 20, the volatility will be more. Now, coming into the Nifty levels. While connecting the highs and lows of last week and seeing for the Fibonacci retracement kind of stuff, from the entire race from here to here, which is 17,043 to 17,639, almost a 600 point raise, 61.8 retracement comes over here, this particular level. But whether we stop at this level, definitely not. By seeing the situation now in SDX. So there are possibilities that we can stop over here, which is 17,174. Approximately this 78.6 kind of retracement. There are possibilities we can stop over here. And to add on to this trend, racing trend line also provides a support here, this particular zone. So there are chances we can take support over here 17,174 and then slowly reclaim again towards this particular zone, which is 17,500 in next 1 or 2 days. Only if we are going to go below this particular level, which means 17,174 or 70 levels, we can see a fall towards 17,000 mark, or else we will take support at this level and then climb at least to the tune of 17,500. And to add on to this, our markets is not that bearish as US markets. So we can to mark this kind of levels and trade accordingly. When you need to worry about this 20 or 200 moving average, only if we break 17,000. Say for example, if we are breaking this particular level 17,046 and there will be a minor support at the psychological mark of 17,000. If at all we break 17,000 and trade below that particular level for maybe half an hour or so, then the panicness will increase over the markets and then there will be a sharp fall within very short span of time, and probably in maybe one day also we will reach this 200 moving average and then only we will try to bounce from there. So as of now, the situation is like we will take support around 78.6% retracement of the Fibonacci level and then reclaim, move slowly on the higher side. And the move on the upside will not be very fast this time. It will be very slow only because all the results have come. All the good news for our markets has been factored in. Uh, During this RBI policy, almost everyone has thought that there will be at least a 25 basis points rate hike. Only very few members have said that there are possibilities RBI will not hike the rate, and they 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 have done so, which was very unlikely. So we have factored all the good newses. Even after factoring all these good newses, we are not able to cross the 200 SM. So the next week is very crucial for our markets. It will be a make or break zone. Either we need to cross the 20 moving average and climb higher, or else we are supposed to break this 17K mark and test this 16800 levels. Now, based on this, what position you can take? I can suggest a hedge like what we have done last time, but let me see whether I'll be able to give only a one-sided call. Why? Because the first fall in markets will be most probably bought on Monday. So this 17,500 call, it has closed. The last tick was 76.7, but I believe the close will be beyond 80, 82 levels. Why I am saying this is because the fall in markets yesterday came only in the last 15 minutes. So the adjusted close will be most probably above 8. And on Monday, if you are going to see a 190 points gap down opening and drifting further towards 200, 220 points, this 17,500 call will come below 30 rupees. Below 30 rupees in the sense our risk is maximum only 1,500 rupees. We can take that particular risk. Why? Because after for Nifty falling 190 points or 120 points, 200 points, it is not fair or smart to buy a put over there. That is a new nonsense kind of stuff. So according to our level, we are expecting Nifty to take support at this particular level and then climb. I mean, move towards the higher side. So the last close is 17,374, and if it falls over here, the fall will be for 200 points. And it is the racing trend line, and it may or may not take support over here. There are good chances that it can take support over here and climb. That is the reason I am suggesting a one-way directional thing. Why? Because it is a critical juncture at that particular area. Only if it breaks and close below this particular zone, we may expect a fall towards 17,000, or else definitely from here it will climb higher, at least to give a chance for biggies to short again. Okay, it will be a trap for retail traders, but we can make use of the trap and make money in quick time and get out of the position. So probably if we get below, it's not if markets are going to open 190 points, 200 points lower, definitely this 17,500 call will be quoting below 30. I'm sure about it because it is 400 points away from that particular level. Sorry, 350 points away from that particular level. So it is worth to take a risk over here. Just 30 points, 1500 rupees, we can take a risk. And to add on to this, let me convert this particular candlestick into Heikin-Ashi. This is a normal candle. This is a Heikin-Ashi candle. In Heikin-Ashi candles, reversal comes only when it forms a doji. See over here, there is a doji and then it has climbed higher. See over here, there is a doji and then it climbed higher. See over here, there is a doji and then it climbs, it drifts lower. Over here, we are not seeing any doji kind of stuff over. So that makes me a bit more confident that we can raise from this particular level. That is the reason I am suggesting a one-way directional call. If you are ready to take that 1500 rupees risk, go for it, or else keep quiet for next week. Why? Because Nifty is in a critical situation. It is like it is in coma stage at IC. Anything could happen. We are done with the analysis for Nifty. A too lengthy one this time. Why? Because I need to make you understand why I am expecting this kind of move in Nifty in the upcoming week. Mark the levels in charts, or else at least note it in your notepad where you can see it immediately, or else you can view the video anytime for the levels. There is no restrictions, and trade accordingly. The only thing I can advise you right now is stay cautious in markets, at least for next week. Don't do something funny and freaky and get trapped in positions. Get trapped in any direction of the markets. Maximum try to cover your positions intraday itself. Once again reminding you, newcomers, please subscribe to our channel, and I will add all our telegram links in the description of this video. Please subscribe in our telegram channel too, wherein I will use to post market updates as well as trading calls during market time. Have a good day. Bye all. We will see you in the next video of Bank Nifty analysis.